Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Monday, the 28th of June, 2023, 6:15 p.m. Central Time. Whoa. So here we are with the craziness of the day. The day's event to me was the fun of watching the four central bankers, Bank of Japan, European Central Bank, UK Bank, and our Federal Reserve, all on one stage in a relaxed environment, laughing and answering very, very, very pointed, great questions by, I think it's Sarah Eisen was the host. It was a wonderful interview. If you got a chance to see it, great. If you didn't, I'm sure it's on CNBC. So you want to go there and you want to look at it. It's lengthy, but it is detailed. So let me give you the synopsis. Other than the Bank of Japan, these three bankers are all committed to putting the genie of inflation back in the bottle. They all have a 2% goal. How to do it? They vary, but you got to keep going with interest rates. And our Fed doesn't think you'll get to that 2% goal until 2025. They believe they'll get there, but that's when they think they will. They, to a banker, say, yeah, headline inflation comes down, but the problem is the sticky inflation. And each economy measures that in a little bit different way. But ours is, as you know, looking at things like food and energy, and that is where the problems lie. So we'll see what housing does and the like. Now, we get jobless claims tomorrow. We get the we get a final look at first quarter GDP. We're already done with the second quarter, so, what does it matter? I don't think it means anything. It's just adjustment numbers. And you get new home sales coming out for May, so that's going to be an important number, too. The stock market looked at all this, and it's still going up. So the market is not yet scared off by the higher rates that are coming because the market believes you're at the very end of them. Maybe there's two more is what the market says. So the naysayers have switched their game and they've said, okay, yeah, we can see the Fed's not going to back off this year. Maybe there's two more hikes. So what? We'll keep buying because that's not enough to damage the market. And you haven't proven to me that earnings are getting hurt in any manner, nor have you proven that the jobless numbers I have gotten to the point where the economy's in trouble. They flipped on you, and understand the flip. When you take a look at the S&P 500, now for the week, you have flipped the market. Now you're up 0.87, almost a percentage point. The market has come back up through here. You have the pattern of higher lows, higher highs. For me, as a chartist, the only number that would get me scared on this chart now from being long is getting under 43.6850. Barring that number, if the market wants to rally and hold the support, and the support levels to me are the 18-day average of closes, the next resistance is 44.83. Will it get there? Don't know, but that's the target before it gets under 43.6850. In terms of momentum, we've corrected the momentum up from the mania buying off artificial intelligence, got a brief correction, and now is momentum pointing up? It is. It's starting to go back to the upside at this point. When we take a look at the micro mini NASDAQ, it came down. It still has the pattern of lower highs, lower lows. It's in a consolidation. You can get the downtrend of lower highs, lower lows, but it's fully offset if you stay over the 18-week average of closes, because when you're over it, your bias is up. Under it, your bias is down. So the filter on that is that bias, you have nothing. Here, too, you corrected and away you went. Notice I've still got the green on these numbers. I did one of them blue, if you go back on the slow stochastic with me, over here, and I like the blue much better. I just need time to knock these off today or tomorrow. I'll get them done. In the Dow, I think if you get up and clear here, the 34,232 level, you get bullish again. You wouldn't want to get the market then under 33,995, and you open the door for the possibility of a challenge of the upper Bollinger Band until that happens. I don't see that in the Russell. The Russell, to me, is still in a bearish camp with resistance at the 18-day average and support at the combination, it's right here, of the 200 and the 100-day average, the gray and the blue. So a difficult market. In the T-bond market, I think traders are just scratching their heads. They're going, what the heck? Maybe this is it. Maybe it's just got to sit here and you take the volatility out of the market for a while. That seems to be what you've done. Look at how narrow the Bollinger Bands have gotten. If the market pops up, it's got to clear the 129.5 area to prove it's going anywhere. But I wonder about all these people that keep saying that the interest rates are going higher on the back end, because the higher this goes, those people get in trouble with their short positions. Where the market sees the most impact from the Fed is obviously the 30-day, the 2-year, the 1 year, and the 5 years and 3 years. So those are the numbers. And traders often look at the 210, the 310 to get an idea of what's going on. In the dollar is flirting. If it can get up and clear this 102.78.5 level, which it did today, but close over the 102.57.5 level, which it didn't do, it gets back into the bull camp. It's right on the cusp of doing that. Momentum, which had been oversold, is now in the corrective mode, and the trend is up. You need the bias to stay up. In the euro, if it's going to drop here because you've got the swing lines down, but you've got the friendly bias, then I'm looking for the support at 109.07. Now, something bullish happened on this chart. The 18-day average closed over now, or it's over, at least intraday, the 100-day average. That's the first time it's doing that. In the British pound, I have told you, you lost the embedded reading here. I've been looking for a challenge of the 18-day average, set it to each day. Before you got over that, I got everything I wanted today. In Bitcoin, was that mania part of BlackRock and Citadel? Are we seeing the market consolidate that? I think so. When we come to Brent versus WTI, you played, got underneath the 18-day average and back over it, which still means Brent's stronger than this market. Notice how the markets did get down here and Brent to the Bollinger Band in black in an oversold market. What would I tell you to do? You cover all shorts. First challenge, upside or downside, when you hit a Bollinger Band and it's not embedded. Cover all longs at the upside. Okay. WTI, same thing. Okay, no differences, I see that whatsoever. In the Rebob gasoline, got the higher high, lower low. Want to be certain that that's just doing nothing. I'm content having told people to do nothing there. Natural gas, well, are you going to take out these lows and get back over to the 18-day average? It has all the merits of doing that. It's refusing to embed, so you might get more of a correction. Tomorrow we get the natural gas injection numbers. They're looking for about 81, 82 billion cubic feet. That's normal for this time of year. So you put it together, you get a good game plan, and I want you to finish up the week getting my special stock report, which I did on Lucid. Now, it goes off our website tomorrow. I did the monthly, the weekly charts for you. I showed you where the injections of money came in this week from the Saudis, another $3 billion, and talk about Aston Martin stepping in and wanting to take some of the platforms that are being built by this company. Now, the question is, can they deliver? They're not meeting their numbers. They're able to do 10 to 14,000 cars. That's not enough to be a viable manufacturer. The burn rate of money is too big. You got to add a zero to that. You got to do 100,000 to 140,000 cars, not 10,000 to 14. But can they survive given the partnerships that they have? That's really the question. So how do you take a look at it? Go to our website, underneath market research. You can click up here as well. You'll get an icon, or you can call my staff. They'll help you. It goes off our website tomorrow. Take advantage. I'm Ira Epstein. You have a great evening. See you all tomorrow.